Hey everybody, Dan here. So today I want to talk about a strategy that you can use to make some money, and could be weekly or monthly, however you guys decide to build the option strategy. So particularly this is with options, and just to let you know that options are very high risk. So do your research and really pay attention to kind of the market and the trends and what's happening, because there's a lot of risk involved. And so today I'm looking at Tesla, and I'm really focused on just this kind of channel that the stock really has been in since March. And if you look here, there's some times where it's potentially broken out and come back in and kind of touch the top, but always kind of retraced back inside this channel. Well, it looks like we have had a successful day of this thing coming outside the channel, right? So we are completely outside of this drawn channel. So uh, you know this is this is just a quick drawing that I made. I'm definitely not an expert here. This is just something that I've been watching, but to me it looks promising that we've kind of breaking out. And right, we've got earnings coming up next week, so there's a lot of potential for some exciting news. We know that Tesla has delivered record deliveries, and things are looking really well for them. So we've got this really good catalyst. So let's take an opportunity. So where the option strategy comes in is I watch basically kind of what's going on with the stock and where the ranges are. And so you can see kind of at this top level channel. So here we are today is in the 820 range, and if I go all the way to the bottom, the low 700 ranges. So I'm looking here, if I go out about a week or so, that puts me at about 714 according to this generic channel that I've built. So what this just means is that I expect that the stock kind of will linger within this channel here. I expect that there'd be some buying support within just a short 7-day buying period. Tesla is known for making some really big dramatic moves, whether up or down, right? So of course, everything is fair game, but I would put some money on, put some betting that it wouldn't really pass 715 in this range here. And so if you feel comfortable with doing these kind of bets, let's take a look at some option strategies. Okay, so now here's an option chain in Tesla, and I'm taking a look at ranges that I think are very unlikely for the stock to go within 5 days. Remember that we've got earnings coming up on Wednesday, and we've got probably a couple strong days before leading into earnings. And I'm anticipating a nice drop where the stock is going to sell off right after earnings. It's done that very often, and it's kind of a high probability that's going to happen. I mean, anything could happen, of course, but just going back into looking at history, that there typically does sell off. So if I took a look at this chart here, and so now here I put a range about 740 right here. So I'm anticipating that the stock is not going to drop below that number. I mean, again, that's not quite at the bottom of the channel, but again, looking back, it had some nice support here at 718. Again, it bounced off at the 712. So looking like it bounced off at the 731 too. So there's some decent support down here that I'm liking. So I think again, I think we should see some retracement back into this channel. I'd kind of anticipate that just because the way the trend's been going, but I don't see us having this super dramatic move within 5 days. I could be wrong, but It's just something that, you know, I'm willing to take a bet on. And so what you could do and what is a good strategy is, so basically I've defined this number as about a 740. So if I go back here, I can say, okay, so I'm gonna look at the 740 put option. So I'm on the put side, and so currently right now that's selling for $4.80, which, if you remember, is always times 100. So this is actually selling for $480 for one of these options. And now if I go out to 10, width of 10, so my spread is 10 wide. So now this is currently selling, or being asked for about $4.55. So now you always want to get into the middle of this. So, you know, this is roughly $4.40 would be fair, and then I could probably sell this, you know, for maybe $4.90. You know, so you want to always try to get the mid value. You never want to do a buy and a call directly from market order if you can avoid it. So if I buy 10 of these, so now I would collect instantly a premium of $500. And right now my net loss looks very scary because, again, this is the width of the spread. So this is, if you remember, everything is times 100. So this is 10 times the width of the spread, which would be $10,000. But then I subtract the premium that I get, which is $500. So it looks really scary that I would be, you know, getting this big loss. But again, if the stock just kind of bounces down and then maybe has a good green day, and then bounces down and then has another green day, but by the time the week is over, it's not below $740, then I just keep that total premium. So I would have $500 just from that trade. So again, and there's some ways too where if it does kind of go beyond our threshold, that, you know, there's some ways that I can avoid that by, you know, rolling the option, or you know, getting out of it. So it's not like you're locked in there forever. But you always want to, of course, you know, this is not a naked put, so this is covered. What that just means is that since I am selling, I am buying against it. So if there's any reason, you know, to you know, say we surpass this number for whatever reason, well, my risk is defined at a loss of $9,500, because again, I would keep that $500 premium. So, you know, there is no risk of going, you know, unlimited. So if I did a naked put and I did not buy these puts, I would have unlimited risk. So let me just show you that here. So if I just did a single option, and if I bought that 740 call, well, take a look at this. I would have, if this thing gets below that, I mean, that is unlimited risk. So, which is something that, you know, as a trader, the goal is to, you know, just be lasting in the market as long as possible. So, so yeah. So this is just a quick strategy that, you know, I'm doing. So, so this coming week, I'm gonna be placing a trade on the 740 strike, and I'll be buying the 730 put. So 740 put, sell, and then buy the 730 put. So that would be a $500 trade. So yeah, let me know what your thoughts are and what you guys think about option trading. It's something where, you know, you can just make some easy profits throughout the week, and, you know, use that money. So what's nice is that you you get that $500. Well, you can do whatever you want with it. You can reinvest it or whatever. So yeah, that money is yours. So yeah, thanks for watching, and good luck and happy trading.